Hey folks, this is Bob Desmond over at the Contrarian Trader, the trading service for traders with day jobs, and welcome to Best Stock Charts for the coming week. I get a lot of emails about the short side of the market, the TZA, which puts you 3 times short of the Russell 2000. We're going to go over that. We're also going to go over gold and the gold mining names because they're looking interesting. They're looking really interesting. So let's begin first with the Russell 2000 and an overview, a look from a higher level view, meaning a weekly chart versus the daily chart. Too much noise. We want to take a look at how the week as a whole went last week. And if you check out last week's best stock charts, I mentioned that the Russell 2000 was overbought. And sure enough, we got a pullback. We went into last trading week with the Russell 2000 leaning into its third standard deviation Bollinger Band. In short, I'll take out all the technicalities. It's not supposed to be there. And last week we pulled back 2 1/3% on the week. Now the good news for us was that I alerted my members that we were shorting the Russell 2000 early last week, and I'll go to the chart of the TZA in a moment. We already have a small short position open on the TZA, and we did well on this position last week. So let's go to the TZA, and you can see that we had a really, really good week last week. Now, a few things concern me here, and I'm looking to add to my position, but I may just scalp that profit from last week first, because what I think is going to happen is that we're going to get a pullback and a retest of the lows, either a retest of the lows or a higher low. And if it doesn't hold 2075, well, then we move on and we'll watch it and not trade it until it finds a new support level. So what I'm concerned about this coming week is that volume to the upside declined sequentially. Friday was very, very light of volume. That's a concern, especially when the path of least resistance is down for the TZA and up for the Russell 2000. I may be a contrarian, but that does not mean I do not appreciate the value of identifying a trend and sticking with it, or if it gets overdone, trading against it. So the chart of the TZA as we go into this coming week looks good, okay? I think that it's possible that we rally up to the $24 level for 2 reasons. One, that's where the 20-period moving average is, and that's a declining ceiling. 2 is that we have a gap to be filled, which opened up on the 14th of November. So $24 per share is where I'm looking for the shares to hit if we don't get a pullback early this week. Stokes are looking good. MACD is looking good. Now, how did I know to get long of the TZA? I'll show you the chart that I was looking at. Now, what you're looking at here is a 2-hour chart. Now, it's a 2-hour chart that I like to use to time my trades. And you could see that we began to break out above this upper band of the declining downtrend channel on the 29th, which is when we opened up our position. And we have a nice profit right now, and it's consolidating, and I could make the case that the shares should continue higher this coming Monday, but ideally we get a pullback because that's eventually what's going to happen. And we're either going to see 1, a higher low, 2, a double bottom setup. That's what I'm looking for. And again, if we break down below $20.75, we sit, watch, and wait. Right? That's the key to trading. Sit, watch, and wait, then execute on a breakout or a breakdown if you're looking to short. So more to come, members, on the TZA. And immediately following best stock charts, I'm going to segue into market pulse check, which is where we review the health of the overall markets with members, along with a review of our current positions. So members, more to come. We also have a 14-day free trial offer. If you're not a member, please sign up for it. Take advantage and get the market pulse check for the coming week. All right, so PZE, Petrobras, Argentina. I discussed this one last week, and I mentioned it didn't hit support yet, and sure enough, it continued downward last week, about 13.5%. Now, you could see that we bounced on the 30th, then again on the 1st, and then again on the 2nd. So we're basing here, yet we haven't broken out above this upper band of the declining downtrend channel. So No reason just yet to get long of the name, but soon. The setup is looking good. Now, in terms of hitting historic price targets, we're not there yet. We broke through a price target last week, and now we're looking at $4.60 to act as support. I think it's reasonable to expect that support level to get hit. If that breaks, it comes down to, let's call it $4.20 per share. Volume last week was very high, so you still have institutional distribution. So no rush to get involved with this name just yet, but it is looking more attractive this week than it did last week. Members, more to come. BETR weekly chart. All right, so weekly chart, folks, this is what we do. We want to identify where there's historical support, because when we buy at historical support, we know that we have demand on our side, because it proved in the past, not once, but twice, that this support level was strong. What did it do last week? It bounced right off of it. Right? That's what I teach members. So when you go to a daily chart, you can see that we still have RSI at 16.21. All right, so it's still very oversold. It bounced several times off of key support last week, and on Friday, we flashed a bullish key reversal. Very, very attractive. Volume rose to about average. That's good, but we do need to see up volume move higher. So I think this time next week, we're going to be talking about BETR trading considerably higher from where we closed on Friday. So BETR is looking good as a long. Okay, the next chart up is Advanced Accelerator Applications, AAAP. All right, this is an extreme oversold stock, but frankly, it only has RSI at 18.74, so it really barely makes it onto our screener. Now, the real reason why I'm discussing it this week is because I think that we're going to get a lower low on AAAP, so I may just short the name next week in anticipation of buying it. I know that sounds confusing. Stick with me. The reason why I'm thinking about shorting it is because what you have here is a dead cat bounce. Last week, we bounced off of the third standard deviation Bollinger Band, putting in a low at 28.14. It rallied for a few days. You can see by the topping action, you have sellers that were selling into strength. That's not good. So either we're going to break through the upper band of resistance here, and I'm not going to trade it, or it's going to break down below this lower band of support, and I'm going to short it. Now, before you go shorting it, you need to appreciate the fact that you have resistance below, and it bounced off of it last week. So beware. If we break down below this support level, we're coming down to $27 per share. That's the next support target, and that's where I think that we're going eventually, and that's where I'll be looking to buy the shares and cover that short. So members, more to come on AAP. Shutterstock, SSTK, never traded it before. Weekly chart. All right, so here's where the markets were sending you a signal. Way back here in March of 2014, when it was leaning into the 3 standard deviation Bollinger Band, flashing topping tails, then you had a bearish reversal week. It was all over at that point in time, and look where we are right now. So we are obviously in a downtrend. Last week we dropped, what was it? 8.69% on the week. I think that we're at a bare minimum. We're heading down to the support level here. Daily chart. Now that we know where our support is on a weekly basis, we need to appreciate the fact that we broke through support on Friday on a daily basis. So in all probability, we're going lower. And as I just discussed on AAP, very similar chart setup happening here. You had a drop, a dead cat bounce, and then you had a break of that lower band of support. Very much the same type of trade. This should have been shorted. Now, I think that we're probably going to head lower, unless, of course, we gap up on Monday and recapture this support level. Then it may be a buy. But if it drops back down below the support level, it's all over. It's going down to this support level here at a bare minimum. Volume continues to rise sequentially, so you have institutional distribution. It's not time to buy these shares yet. RSI is at 18.14. Members, I'll send out an alert when we execute the trade. All right, let's talk now about extreme overbought stocks that we're watching. REX, Rex American Resources Corp. We have RSI 90.53. So very, very overbought, right? It can't go any higher, right? Wrong. It can go higher, and it's probably going higher. This stock is in fuego. It had a bullish key reversal on Friday, meaning it engulfed the prior day's move. That's a very, very bullish setup. It's an outside day. You may hear it called as well. And the shares are probably going higher on Monday. That being said, do I think the end is near? Absolutely. We have, again, RSI at 90.53. This stock is not supposed to be this overbought, but it is. And it's been here before, and you saw what happened subsequent to that. Stochastics, you have a double top formation forming. We were in an orderly uptrend. We have now gone parabolic. We've burst through the upper band of the rising uptrend channel. This is not going to last. Volume, though, and this is what would concern me the most if I were looking to short the name, which I am. Volume is still very strong. So you still have institutional demand that is causing the shares to get bid higher. MACD still strong. So it's not time yet to go shorting the shares of REX, but soon, very, very soon. Weekly chart. In all probability, we're coming up here to 110.65, which acted as resistance back in August of 2014. So in all probability, that's where we're going, and that's where we'll be looking to open up a short position. Members will be sending out an alert. Next chart up, IFCI International, IFCI being the symbol. We have RSI 89.75. We had a bullish key reversal on Friday, meaning it traded down, closed up. Very bullish stuff. Volume is dropping off. It's trending down, which is a good sign for shorts. However, you still have volume, which is above the moving average. So you still have institutional demand, and you don't want to fight them. Now, what's interesting here is that you have a double top on MACD, and the histogram is trending down. So what does that mean? What that means is that the shares are losing momentum, and that's a good thing. So we'll be looking to short the shares soon, but I still think that the shares can and will move higher. So rather than shorting on Monday morning, I would probably be looking to buy the shares in anticipation of a surge higher, and then we'll wait for the markets to send us a signal, and that signal could be a bearish key reversal, a bearish engulfing of the prior day's move. There are many, many signals that the market could send us telling us that the rally is over. Maybe it's a shooting star formation. Many indicators out there. Now, on a weekly basis, what we don't have here is what concerns me the most. And take a quick look at this chart. And this chart here encompasses the entire price history of the stock. And if you could tell me what is missing from this chart, I'll give you 2 years free for the price of one to the contrarian trader if you could tell me what's missing. And I'll leave you with that. Just answer the quiz in a moment. Volume last week. Folks, this is institutional demand. So don't go fighting these guys just yet anyway. Right now, I would want to be on their side because they're still buying. So no rush to get short here, but soon enough, don't forget to answer that quiz question. STLD, Steel Dynamics. I've spoken about this one for several weeks now, and last week we did break. We went from a high of 35.97 down to 33.85. I had two members that traded it and booked profits on it, and congratulations to Anthony and Zachary. Good trade on your part. So the shares reverse, which is why I don't want to stay short of these names all too long. Once they pull back, I want to respect the trend, appreciate the fact that the trend is probably not over. The markets gave us a gift, a scalp to be taken, and if you don't take it, this is what happens. The markets gave us a short-term profit, a scalp to trade. I didn't make the profit. Members did. I didn't. And the shares continued higher. So you really need to book your profits quickly and expect the rally to continue because the trend is still higher and we want to respect the trend. We may be contrarians, but we respect the trend. So STLD remains a short candidate. Do I think it's moving higher next week? Yes, I do. Because on Friday, it flashed a bullish key reversal, meaning it traded lower to reverse to close higher and at the highs of last week. How can you beat that? Volume, though, this should be a concern. If you're long, look at the volume. It's nowhere near like it was in early November. It's dropping off of a cliff. So if you go chasing the shares higher right now with RSI at 86.25, you do so at your own peril. Because there will be guys like me, speculators, looking to short into STLD because I'm not the only guy out there making these observations. These shares are losing momentum. Stokes are very, very extended. MACD forming a double top. Histogram really losing steam. I think this one goes negative next week, at least for an intra-week pullback. So members will probably be looking to short STLD this coming week. But that doesn't mean we'll be doing it on Monday. It could be at any point next week once the market sends us a signal that now is the time to short. And again, that signal could be a shooting star formation. It could be a bearish engulfing of a prior day's move. It could be a bearish key reversal. Any number of setups could have a short of STLD. Monthly chart. And as I did with ICFI, I'm going to do the same here. What's missing from this monthly chart? This chart encompasses all the data that we need to know about on STLD. What's missing to help me as a short identify where the best risk to reward entry point would be? And that's the clue I'll give you. If you answer it correctly on both of these, I will give you 2 years of the contrarian trader for the price of one. Okay, now we're going to segue into the gold mining plays and the gold plays. We have the US dollar, and we always need to begin, when we're talking about gold, we need to look at the US dollar first because gold is priced in dollars, right? So we want to take a look at the UUP. The UUP traded differently than the Dixie last week. Now, the Dixie is the index versus a basket of other currencies, as is the UUP. Now, the UUP broke down below key support last week. The Dixie did not. It held support. I'm going to go over that with members in a little while because it's a bit of a concern. So, the UUP bearish key reversal last week. No shock because the prior week we saw topping action at resistance. So, it's good to see that the dollar is beginning to lose steam. And now under the Trump administration, you have a lot of traders out there selling off gold because they believe that inflation is going to hurt gold. That's a joke. It's ridiculous. It makes no sense because what they're assuming is that the Federal Reserve is going to have to raise rates dramatically throughout the course of 2017. There's only one problem. They can't do it. There's no way that they can do it. Because if they did it, our borrowing costs, what it takes to not even borrow new money, the borrowing costs for our existing debt will go through the ceiling, and we can't afford it. So you have Trump that wants to spend a lot of money, provide tax cuts. I'm all for that stuff. However, he's going to need Janet Yellen, and he's going to come to love Janet Yellen's policy of low interest rates forever. So I'm not a believer that high inflation is going to cause the Federal Reserve to raise rates because Janet Yellen's already said it not once, but twice that I know of, that she's willing to let inflation run hot in order to inspire growth. Now, that being a known, the dollar will weaken if they are dovish. And don't forget, this week is the big week. If they don't raise rates this week, which I tend to doubt because their credibility, if it's not already shattered with you, would be shattered with the most hawkish of Fed-loving people. Now, I believe that they're going to raise rates in December. I do not believe that they will indicate that they will continue to raise rates throughout 2017 because that will cause the dollar to spike. That's not good for stocks, folks. Remember, the S&P makes most of its earnings from overseas sales. As the dollar rises, the cost of U.S.-made products increases. Not good. So the dollar, in short, I believe is going to pull back. Now, we do have a referendum coming out in Italy that could set the stage for a possible exit of Italy out of the EU vote later on in 2017, but we're not there yet. So watch for a break on the U.S. dollar, and you're going to see gold rally. This is a daily chart. Now, we bounced off of the December 1st lows on Friday. Bullish key reversal. We gapped higher. Bullish key reversal on the day. They tried to take it down off the highs of the day. What did it do? It held support, rallied back. The problem is it closed right at support. So what are we looking for here? We're looking for a breakout. We're looking for a drop in the US dollar and a breakout on gold. Overlaid here, you have NUGT in blue. You can see we have a double bottom setup forming. Let's go to that chart. Daily chart. This is a double bottom setup. In fact, let's update the chart. Okay, so here you have it. If you became a member today and you logged in, you'll see that I'm down actually on NUGT as a position. We hold a position now in NUGT, but it's only a fraction of what it once was. We were buyers of NUGT going into 2016, and we enjoyed this rally all the way up. And then we began to scale out of our position as the shares began to break down, and thank goodness that we did. We've also traded it as a multi-day trade a couple of times in between, but right now what you'll see in my portfolio is only a fraction of what we once had. NUGT made our year, but our year was made back in July because of NUGT, and our short of the Russell 2000 using TZA back in January of 2016. So an excellent year this year. In terms of NUGT, we have a double bottom setup. We gapped higher on Friday. Now we are at resistance. So what we're looking for again, folks, is a breakdown on the US dollar. That will set the stage for a rally in gold and the gold mining plays. Volume on Friday of NUGT was very strong. Stokes are not only hooking up, but they're also breaking out. So I think that we are nearing a point where the gold and gold mining names can be bought as a long, and I think they're going to have a heck of a bull market run. And that's it, folks. Members, let's roll into the week ahead commentary. We'll begin with Market Pulse Check, which is where we review the health of the overall markets, and then we'll discuss our positions on the charts. And if you're not currently a member, please join. Sign up for our email opt-in list if you want these videos each week. And if you have any questions, leave a comment on whatever social media platform you're watching this on, or send me an email. Either way, look forward to speaking with you soon. And by the way, this is our 11th year. Don't forget to take the quiz, and I'll talk to you soon. Members, let's go to the week ahead commentary. Okay, members, let's segue into the week ahead commentary. We'll go through the Market Pulse Check, which is where we discuss the health of the overall market. We're going to talk first about economic data that was released last week. Then we're going to talk a bit about the economic data that's coming out next week, plus the Federal Reserve. So GDP, second revision last week, it beat. But remember, the reason why it beat